Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody, let's take a look again on the gold market. So as you can see, last week market has spent really tight range. That's why we have almost no impact on the high time frames on the daily, on the monthly chart, on the weekly chart. The one thing that maybe could be important on the weekly chart is actually we've got downside continuation and everything goes nice with the double repo sell pattern. So potentially this pattern suggests deeper retracement. So initially we will be watching for this level. This is because strong support and actually daily oversold, but this is also the weekly oversold, and that's why, although the double repo pattern usually has more extended targets, somewhere around 22 even, but first we will be watching for this area as potential downside target. So on the daily chart, on Friday we talked about upside bounce, and actually it started well in the beginning of the session, but later when the personal consumption expenditures have been released, and you can see this rally has been stopped and reversed. So from that standpoint, we suggest that now market more or less ready for a downward continuation. Mostly it stands on the signs that we see on the intraday charts. First of all, on the 4-hour time frame chart, you could see that we have flag consolidation, which is actually potentially bearish. Also signs of the bearish dynamic pressure appearing. So you could see downside price action, but MACD shows on the upside action. So this is signs of the rising bearish pressure. Second, or better to say third, is actually here we have the sign of the failure of the deep retracement. So recall our conclusions that we have made on Thursday. This performance that has been formed here was testing these lows, showing wash and rinse of these lows, upside bounce and tight standing. We said, guys, this looks like the market is not done yet with the upper direction, so be prepared for possible another leg up. And actually it has started pretty nice. So it was really fast and sharp upside breakout of this consolidation, which should be completed somewhere in the way ABCD or more extended performance. So chances to reach 2375 existed at this point, but then you can see upper direction fizzled by the report, statistics report, and market collapsed. So this is a kind of the external interruption of the normal technical performance that actually led us to treat it as failed stronger upward retracement. So it means that with these things in mind, it seems that market is ready for downward continuation based on these factors that we just have discussed. So correspondingly on the hourly chart, you could see actually how this has happened. This was upward action out from the consolidation that we have discussed on Friday morning, and then you could see what has happened, just sharp collapsed. So by our suggestion, if our conclusions are correct concerning the end of the retracement as market is ready for downward action, we suppose that we could start week with this downside action and start watching for these resistance levels 23.35, 23.44 for a possible taking the short position. Just let's keep an eye on them and see what will happen around it. So with this retracement up, maybe it will be a nice opportunity for taking the short position. Once again, I just warn you about the short positions, as I already said many times, that this is only for those of you who are ready to take short position. We strongly recommend, in general, if you're investing in gold or searching chances to buy gold for long-term investment, do not take the short positions. This is scalp, some kind of the very short-term trading against the major tendency. It carries significant risk because gold could react on any news. So for instance, as you know, Houthis shot the Navy carrier Eisenhower on Red Sea 2 days ago, and it's really big question how market will open on Monday. I just put this in news in the Telegram, and this news appearing day by day. So its overall tendency and probability skew stands in favor of the upward continuation. Short trading on the gold, well, it's not acceptable to any other, to everybody. So here I'm just taking all this stuff aside and speaking about the just charts, what we see on the charts. And from this point of view, we could keep an eye on these resistance levels for potential taking of the short position on Monday. If we are correct in our suggestion, then gold market should keep going lower.